Morning, everyone, and welcome once again to the JBDC Virtual Biz Zone. My name is Sansia Campbell, Public Relations and Events Coordinator here at the Jamaica Business Development Corporation. Thank you for joining us once again for our JBDC Virtual Biz Zone. Morning, Greg. Thank you for joining us. So this morning, we're going to be continuing with our distribution and consumer management series. And of course, we're going to be focusing on inventory management techniques. You know, we're approaching the Christmas season. It is said to be a busy season, the busiest shopping season of the year, second only to back to school season. So we're coming out of a heavy shopping season and we're going into another one. And so one of the very important elements, especially for businesses that are in retail, is inventory management. You must know what's in your warehouse. You must know how it's being distributed, when it's the time for you to order and things like that. But I don't know a lot about the topics. I don't want to pretend that I do. So what we've done is to get someone who is an expert in the topic to come and share with you this morning. And so we have with us our own inventory management officer, Mr. Haron Spencer, that is going to be sharing with you on this very, very important topic. Just to remind everyone though, that the session is being recorded. And so if you have a friend that didn't get a chance to come into the session this morning, just let them know that the session is being recorded and it's going to be available on the JBDC's YouTube channel at JBDC Jamaica. All we ask that you do is subscribe to our YouTube channel so that whenever new content is uploaded, you will be first to be notified. So we're going to be uploading the session online. In addition, you can also follow us on any social media platform, Facebook, Instagram, Twitter, and so that you can be kept updated as to the different sessions that we have coming up. So as I said, we're going to be talking about inventory management this morning, and our presenter is Mr. Haron Spencer, and he is the inventory management officer here at the JBDC, of course, responsible for our Things Jamaican stores. And we have 3 locations, one at Devon House, one at Norman Manley International Airport, and of course, the corporate store that is located right here at 14 Camp Road, Kingston 4. So without further ado, I'm going to hand over to Haron, and he's going to share with you some very important techniques as we go into the busy shopping season. Spencer?
Hi, thanks, Sansia. Good morning, everyone. I'm happy to see everyone this morning. And as we go through this presentation, just encouraging you to make some notes. Some of the information might be new to you, some you might be familiar with, but nonetheless, it's beneficial to review from time to time this information, especially on the topic of inventory management, which is so critical for our business and its success. Now, as we go through the presentation, there be some points, a few points where we'll have you participate and share your experiences, possibly your comments as well. And we really invite these, as we'd love to have your interaction. So I'm going to just now begin by sharing my screen. And I hope everyone is able to see my screen as we go through this presentation. So as mentioned there, its topic today is inventory management techniques for micro, small, and medium enterprises. Let me just do this. Okay. Now, what are MSMEs? Now, micro, small, and medium enterprises are essential to the Jamaican economy, making up over 97% of the island's tax-paying businesses. Now, MSMEs are those who have between 1 to 50 employees and earn between 0 to 15 million up to 425 million in some cases annually. Now, this sector is responsible for the majority of employment in Jamaica and drives economic growth and development. Now, why should we manage inventory? Big question. Well, as highlighted there, inventory management is a crucial piece of a business is profitability. But the fact is, many small businesses do not practice good management when it comes to the items that they have, the items that they sell, the items that they procure. It's not well managed. In some cases, businesses have too little inventory and therefore are unable to meet their customers' expectations, which of course will lead to upset customers. And I'm sure that all of you here, none of us, in fact, would want to have customers that are upset at us. Why? Because as highlighted next, it often drives these customers away. And when it drives them away, it will drive them away to another business or drive them away for good. You'll never hear back from these customers again. So that is why it's important to manage inventory. Now, for some businesses, while they do not have enough inventory, some have too much inventory. As highlighted here, many businesses go the other way, overstocking items just in case. So they're not sure of what the demand is, but nonetheless, they're stocking it. And the thing about this is you'll always have inventory at this point if you overstock. So when the customers come, you'll have it. But then the risk is that you are bleeding money from your business. Why? Because this excess inventory not only ties up valuable cash flow, but it also costs more to stock and track this inventory. You have overstocked it, you don't need it. And that is the reality for persons who practice this type of inventory management. Therefore, effective inventory management lies somewhere between the two extremes. And as we mentioned, the first extreme is not having too much, the next extreme is having too much. So right in the middle, that sweet spot is where effective inventory management lies. Now, while it requires work and planning to achieve effective inventory management, the fact is your business, your profits will result from the efforts that you put in to managing your inventory effectively. And all of us want to do that as business owners and persons who are entrepreneurs. Now, what are the main benefits of inventory management? Well, the first is clear, and we mentioned it before, increases profit. Good inventory management increases profits. Why? Because you have the right items to sell at the right time to sell them. Another benefit of good inventory management is that it improves your cash flow. So you'll always have the right amount again of the items in stock, and you're not tying up cash unnecessarily, which could be used for other areas of your business. And when you see your profits coming in and your cash flow is there, you're probably able to improve your product offerings as well. And again, this benefits you as a company. A third benefit of inventory management is having satisfied customers. And we know how it goes. Happy customers bring happy customers. So you'll be able to gain more customers. Can just think about it. When a person purchases from you and they always know that you're reliable in this regard, they'll be quick to recommend somebody else to say, okay, go and purchase from Mary or Jane or Tom. And then your business continues to grow, you increase profits again, increase cash flow, and again, the cycle continues. Customers are satisfied. And those are the key benefits of good inventory management. Now, this is an opportunity for you to, kind of join the conversation, the discussion that we're having here. Now, the question is, can you identify some common small businesses in Jamaica? So I'm looking for your comments in this regard. You can raise your hand, you can indicate, unmute your mic, and answer that question. Can you identify some common small businesses in Jamaica? Looking for the hands, any comments there? And of course, a moderator can also highlight to me if persons are there that I'm not seeing. Any comments? Any hands? Any hands? Common small businesses.
Kenton Roberts said wholesales.
Wholesales, good. Any other?
Somebody says clothes store.
Yes, excellent. Would you consider the jerk man that sell on the side of the road as a small business? Yes, he's one. Opal Reed, seen a hand from Opal Reed. Yes, go ahead, Opal.
Grocery shops.
Grocery
Like,
shops.
yes, small shops in the communities.
Very good, very good. Thank you for that comment. Would you say?
Spencer, there are lots of comments popping up in the chat as well.
Okay.
And barber shops, the fruits
Right.
vendors,
Nice.
dressmakers, tailors, auto parts sales, bars. So basically a wide gamut of small businesses.
Exactly. Even the man that sell the phone credit, even the man that sell the shamai at the bus stop or the stoplight, these are persons who are small businesses. And as mentioned here, we understand the type of inventory. We ask the question, what are some of their types of inventory? For the person that sells at the stoplight, you'll probably see them having shamais, the little brushes. You see them have phone charger. You see them have all sorts of things. That's their inventory. Now, the next question that all small businesses need to ask themselves, who are their customers? And why should they ask themselves this question? Well, it segues into the next question. Understanding the client base is critical to inventory management. It's critical. If you know who your customers are, then you're able to meet their needs, and that's a fact. And it's critical for small businesses to do that. So even the person who has the corner shop, the grocery shop, the hairdresser, whoever it is, they have to understand who their clients are and understand what their clients need. Understand it, why the clients need it as well. And it's good to ask questions of the clients. So somebody comes to your shop for argument's sake, and they ask you for a particular item, you say you don't have it, but you can ask them, you know, what you're looking for this item for, and then you begin to think about, should I stock this item in the future in case this person comes back and needs it? Those are the type of questions that small businesses need to ask. Then our next question is, when is the right time to sell and where is the best place to sell? Again, going back to the illustration or the example of the person at the stoplight. Why does he choose to sell at the stoplight? Because he knows that's where the cars are and they'll stop. And he has an opportunity to walk that lane, walk down the street and sell his items, the shamais, and he picks items that he knows persons will buy quickly. You don't see them selling items that will stay forever on them and they never get a sale. No, they pick the best place to sell and the right time to sell it. You see them coming out in the middle of the day sometimes very early in the morning, sometimes in the evening. All of those are things that fall into inventory management. Another question is, what is the best price to sell at? Now, why is this important? Well, in any business and in every business, there is competition. So managing your inventory, you have to know what is the best price that you're selling at. What does the next person sell it at? Suppose you're selling a product for $100 and somebody else sells it for $80. Is it good for you to continue selling at $100? Those are questions that you need to ask as a small business. And all of these questions, when you ask them, they are critical to your inventory management and the overall success of your business. So this is key for you to understand what type of business that you're engaged in and how inventory and the use of your inventory, the management of your inventory affects your business. Now, we're just going to briefly look on the two phrases that often appear when it comes to inventory and stock. Now, inventory is often called stock in many retail businesses. Why? Because managers frequently use the term stock on hand to refer to products like apparel, like houseware, whatever it is, they refer to it as stock on hand. But across various industries, inventory more broadly refers to stored goods for sales. It also refers to raw materials that you have to use to put into producing items and parts as well that go into production. That's what inventory refers to. Now, in Jamaica, we often use the word stock as opposed to inventory, but it's interchangeable nonetheless. The key thing is to identify what you have and how much you have of it. Now, how does inventory management actually work? Well, the goal of inventory management is to understand your stock levels and your stock location. Where is your stock? Now, each business owner needs to answer 3 critical questions when it comes to inventory management. The first is, where will you store your inventory? And as a point there, you can have physical inventory and you can have just-in-time inventory. Physical inventory, that means you physically have the products there with you at all times. Just in time, for example, if you are trading, you might choose to go and buy it just to fulfill that need. So you don't tie up any space, so to speak, when it comes to inventory. That's the question you need to ask. A second question you need to ask is, how much inventory will you store? And this goes back to the sweet spot that we had mentioned earlier, not having enough or having too much. The key is finding that balance when it comes to your inventory and your stock levels and your location. Suppose, for example, you live in Kingston and you know that your products or your raw material is in the country, Montego Bay. Is it practical for you to store it all the way down there? How will you get it when you need it? Again, balance is needed. Sometimes you might choose to keep some down one location, some in another location, but the key is to have balance. A third question that needs to be asked is, how will you store your inventory? And of course, this is dependent on the type of inventory that you have. Now, for example, if you have food products, you know that you have to store it in a particular way to prevent spoilage. If you have apparel, you don't have to store it like how you store food. You store it in another way. So again, that's another question that needs to be asked when it comes to managing inventory, understand your stock levels and your location. Now, overall, inventory management includes procuring, storing, picking, packing, and shipping of products. That's what inventory management boils down to. And the goal, the ultimate goal, is ensuring that the product is there when customers are ready for it. That's the ultimate goal of inventory management. Now, another good phrase that you need to be aware of, if you're not already aware of it, is inventory turnover. Now, what is this? Now, as mentioned here, one measurement of good inventory management is inventory turnover. It's an accounting measurement, and inventory turnover reflects how often your stock is sold in a period. Now, when you think of turnover, for example, within a 3-month span, how much do you sell? Within a 1-month span or a week span, how much do you spend? How much do you sell? How much of your stock is moved? How much raw material do you need to carry in? That is when it comes to inventory turnover. Sorry. Now, a business does not want to have more stock than sales. Sitting on the shelf does nothing for your business. Having inventory on the shelf does absolutely nothing for your business. If it's not moving, you're suffering losses. And poor inventory turnover can lead to dead stock, stock that you have that will never sell again, or unsold stock, stock that is just hanging there on. And because it didn't stock it at the right period, for example, it's just there waiting and taking up cash flow, taking up unnecessary space in your warehouse. So inventory turnover is critical for every business. The fact is, the more often you can sell and repurchase, the less storage space you will need and the more profit you will make. That's critical. And I just want to throw out a question to you as the audience again. What do you think is a good inventory turnover? In terms of a percentage, for argument's sake, what do you think is a good figure for inventory turnover? Any comments on this? A good amount for inventory turnover, good figure, good percentage. Anyone care to take a guess at that? Anyone? So imagine you have 10 of an item and in 3 months, you only sell 2.
Kenton Roberts says 30%.
30%. Good.
70% weekly, somebody says as well.
Yeah. Remember, as we said here, the more often you can sell is the less storage space that you require. So a good percentage is a high percentage, so to speak. The more it moves over, the better it is for you. And it's key to understand how that works. Now, when it comes to inventory management techniques, because this is the aim of this presentation, inventory management techniques. Now, there are several inventory management techniques used across various industries. Now, for some businesses, they use a mixture of these techniques. And why? Because there is at times no one size fits all. So what works for one may not work for someone else. What works at one particular time may not work at another particular time. So many businesses use a mixture of these techniques in their inventory management. And below are listed some common inventory management techniques. The first one is FIFO versus LIFO. Another one is demand forecasting. A third is minimum order quantity versus economic order quantity. Another one is ABC analysis. Sorry, I have that twice. That's a mistake, sorry. Another one is drop shipping. And we'll get into these as we go along in our presentation. Now, the first one, FIFO versus LIFO. Now, first in, first out is FIFO, and last in, first out is LIFO. And these are accounting methods that are used to cost the type of products that you have as well. And it is reliant on how your products move through your warehouse. Now, first in, first out is as what it says. The first products that come in are the first products that go out. And it is a useful system for businesses because they're able to sell their oldest inventory first. So, for example, think of if you have food items for argument's sake. It would be good to use this as an inventory management technique. Why? Because it keeps your inventory as fresh as possible and eliminates items being perishable or items that expire on you. So you have a grocery shop for argument's sake and you're selling a loaf of bread. And you know the loaf of bread comes with a tag on it. It's good to take a note of that. Note of the dates on the products that you have. Why? Because you need to make sure that they're moving out. You don't necessarily want to have the expiry date pass and you're trying to sell it again. Why? Because you sell somebody a stale loaf of bread. That's it for your business. You know, they come back there. They have all sorts of complaints. They curse you. Why? Because you sell them products that were expired, products that perished. And it reflects again on your business. It reflects on the cost. It affects your cost as well in terms of your business. Now, LIFO is last in, first out. It's the opposite of FIFO. So the last or the most recently received inventory is the first out the door. Now, while FIFO is the default costing method that you can use for inventory, LIFO makes sense for businesses that do not ship perishable items. So for example, you have clothing items for argument's sake, or think of the man on the street that has credit selling. It's credit. The most recent him just sell it because it's the same thing, it's just credit. So it makes sense to use it in some cases and it makes sense to use FIFO in other cases. And again, you can look on your inventory and how your products are moving, the type of business that you're engaged in, and determine which one of these methods are critical for you and your business success. Another method, is demand forecasting. Now, demand forecasting utilizes sales projections. Why? Because it helps you to understand how much of each product you need to have on hand at all times to meet your customers' demands. Now, for established businesses, demand forecasting is much easier for them. Why? Because they have historical data. So if last year they sold 50 or 100 of an item, they can look and say, well, next year I project that I can sell the same amount. And that's easy for them. They're able to project what demand will come for their particular item. Now, for newer businesses, on the other hand, they don't have that luxury of having historical data. So they need to rely on some assumptions. So imagine you're just starting a business. For example, you're into cosmetics, for argument's sake. Now, what type of cosmetics are you going to purchase? You have to rely on an industry assumption. Think of persons who, for example, are hairdressers, who sell wigs, things like that. They look on the assumptions, they look on the market and say, okay, what does the industry say? Which one of these wigs will sell? And that is what they need to purchase, and then they sell it. And then based on what they sell, then eventually they'll have a sales history of their own. So over time it comes. And as a business, it's critical to implement this type of inventory management technique, as it helps you to manage the products that you have, the products that you store at any given point. Now, as the next point highlights, demand forecasting is essential to inventory management. Why? Because it helps you determine the minimum amount of a product that you should have on hand, and you are able to set a reorder level, a reorder target when you reach that number. So, for example, your data that you have says that you need to ensure that you have 100 of a particular item. So when you see you have sold and you reach about 10 left, you have to reorder, because why? The demand that you have for this particular product will soon be reached, and you have to restock so that you can have sales again. So you have to constantly be looking on the business. What is happening? How are the sales moving? And it helps you to manage the inventory. As another point too, especially when you have had sales over a period of time, you should revisit your demand forecast. You can do so probably quarterly and adjust your quantities, adjust your reordering targets. Because what? There are various factors that affect your demand, and demand that person's placed upon you. For example, a season. As was mentioned earlier, we're going on to the busy Christmas season. Some items that will sell in Christmas season might not sell at another time of the year. And just to throw it out to you, looking on these factors, we said seasons, trends, raw materials. A question to you at the audience: why do you think these factors affect the type of inventory that is demanded of you? It's a simple question, but it's profound. Any comments on this? Why does these factors affect your demand? Any comments from you as the audience? Why does it affect your demand? Seasons, trends, raw materials. Why do these affect your demand for inventory? Think of the type of business you have. Think of a particular season. We're just coming out of the summer. What are the trends that are there? What's happening? What are the raw materials? Think of the pandemic and how it affected many businesses. Just think about it.
So Kenton Roberts says what you stock is dependent of the demand of customers.
Right.
Ramona says because certain things are used at certain times faster, hence you will have to increase production.
Exactly. And you think of the trends as well that happening in the market. When the pandemic hit, what was in high demand? Sanitizer, face masks, all of these things. And of course, it would have affected a business. If you were producing those items before, then you would have increased production. If you were not producing those items in at all, then you might have to get into them. You might have to pivot and create items that are essential for customers. So demand forecasting, you have to look on it. You have to look on what's happening in the industry. As we said, the seasons are there. You have the summer season. You have the quote unquote winter season if you are into, certain businesses. Food, for example, that when it's coming out to Christmas, you have the Christmas cakes and all of those things that you'll have to have more of. Persons will be demanding it. Think of the raw materials and the access to raw materials. What you'll have access to now at a particular price, you might not have access to it at that same price a couple of months down the line. So it's essential to understand and forecast effectively based on the historical data that is available to you. That's very critical. Now, we move on to the next inventory management technique, which is minimum order quantity versus economic order quantity. Now, minimum order quantity and economic order quantities are two different methods a business can use to determine when to reorder products. Now, minimum order quantity focuses on maintaining the minimum possible amount of each product type that a seller is willing to fulfill. So again, think of the person at the stoplight selling shamais. They have a minimum quantity that they have to have, because they know how much will move in a particular day or in a particular month. Versus another product that they have. They might choose to have more of that or less of it. Again, high ticket items tend to have a lower minimum order quantity, while low cost items have a higher minimum order quantity. Yeah, the dollars and cents goes into it as well. How much does it cost you? Does it make sense to purchase it in a larger quantity now or wait till later? Those are questions that come into inventory management. Now, it is important to take this into account when we ordering products from suppliers, because suppliers themselves, persons who you purchase from, have their own minimum order quantities for a particular product. So you go to a business, for example, you're making candles, and you might go to a business that sells the jars for the candles, and they say, okay, you can only purchase a minimum of 100. Does that work for your business? Does that work for your own sales projection? Suppose you don't sell 100. Does it make sense for you to take 100 now? And then again, you factor in, okay, if I buy the 100 now, and then the price raise in 3 months, then at least I know I have a lower cost that I got these items at. And again, in some cases, when it comes to the minimum order quantity, it might be good to have a discussion with somebody else in the same field of business. Why? Because maybe you can create a linkage or partnership with them to get the certain discounts from a supplier who is selling a product. Now imagine that you can only afford 50 of the item, the 50 of the jars for argument's sake, and you go to the supplier, they told you it's only 100 is the minimum. Then if you have somebody else who's in the same line of business, you can create a linkage with them and say, okay, you buy 50, I'll buy 50, and then we approach that supplier and you get a discount on that. Those are the type of things you need to be thinking about. Asking questions of persons who are in the industry and doing research as well as to what makes sense for your business. Now, economic order quantity is a more common method for persons in manufacturing because it accounts for variable costs in raw material, production, and fluctuating demand. Now, for many businesses, you'll see, especially for medium-sized businesses, to keep their costs down, they purchase the greatest amount possible of a product. So that when the time comes, instead of ordering individual items, they already have the bulk, so to speak, that they can pull upon and fulfill orders. And again, when it comes to the minimum order quantity, imagine that you have a heavy order coming into you and your business. Then it would have been best for you to have enough of the item so that at a particular price, imagine you have to go back to the supplier now after you purchase 50, and then you have to run back to the supplier to purchase another 150 to supply your order. You might get it at a higher cost, and that of course affects your business, affects your profitability again. So it's good to look on these type of methods of reordering so that you're able to fulfill the demands that are placed upon you and your business. Now, a fourth method of or technique of inventory management is what we call the ABC analysis. Now, the ABC analysis helps you to understand what products are most profitable and which are more costly. Now, as the name suggests, it breaks down products into 3 categories. Now, the A products, as mentioned there, these are products that are the most valuable and cost the least to store in the long term. And these products contribute greatly to your business profitability. Now, again, think of the type of business that you have. Imagine that you're at a corner shop. What are the items that contribute the most to your profit? Is it the credit that you sell? Is it the loaf of bread? Is it the water? Is it the bun? Is it the cheese? What is it that contributes the most to your business profitability. Those are your A items that you need to have a lot of them on hand and store them for the long term, so that when the time comes, you're able to sell these items. It's not a trouble for you, you'll always have them. Now, the B items, what are these? So these are mid-range products that are important for sales, but not as big as the A items. So yes, you need to have them, but you don't need to have a lot of them. Why? Because yes, they contribute to the sales, but it's not that significant amount of your sales that it contributes to. But again, you need to factor in these items in the type of inventory that you have. Now, what about the C items? Now, these are the small ticket items with a high turnover. Now, individual sales of these products are not as important to the business, but they are still critical. So you might sell them every now and then. So you don't need to store a lot because they're not demanded a lot, but you still need to have them nonetheless. And these are the C items. So as we say, it's the ABC analysis. And for every business owner, it's important to understand what those items are. You look on your business, even if it's one line of items that you make or carry in your business, which type of the item is most profitable. Suppose you have variations in the item. Going back to bread, you know, you have whole wheat bread, you have white bread, you have sliced bread, you have whatever the case is. Which one is demanded the most? Which one do you need to stock the most? You need to analyze that as part of your inventory management. Now, a fifth area is safety stock inventory. This was missing from the slide earlier, apologize for that. But safety stock inventory, now, safety stock inventory is tied to your sales projections and influences your reorder quantities. And it is especially important for your best-selling and essential products. Now, what is safety stock? Now, safety stock is the extra inventory that you order or have beyond your expected demand. So again, just think of a business that you're selling an item and all of a sudden there's a rush on this item and you don't know where the rush come from. But guess what? You're able to satisfy the customer's needs. Why? Because you had some safety stock. Now, here is a little caveat or a little area that you have to bear in mind when it comes to safety stock. Now, what it will result in inevitably is an over ordering of your products. Now, while it's never advisable to over order products, it is still useful to have a few more units than you expect that you need. So imagine you're selling an item and you say, okay, let me keep an extra 10 just in case, an extra 5 just in case. Yes, you might have spent some money on it and the cash flow might not come as quickly, but then the item will eventually sell. And if you anticipate that this item will continue to be a hot seller, it's critical that you have some safety stock put aside just in case persons come. And suppose somebody down the road, imagine the corner shop and you have 3 shops on the road. The other 2 shops are out. Guess who they're coming to? They're coming to you. Why? Because you have that safety stock. So again, that's another inventory management technique that can be used. Now, the 6th technique is drop shipping. Now, this especially works for persons who are doing online businesses, e-commerce. Now, drop shipping is a process of receiving an order from a customer and having a supplier or distributor ship that item, that product directly to the customer. So again, just think of the type of business that you have. You might not have enough space to store it, but you might have somebody who wants to distribute that product for you, and or somebody else who you are a good friend with, who has a shop that has that item. So if somebody calls upon you, instead of you having to go through the hassle of say, okay, let me find this item and get it to them, you have somebody else, just point them in that direction. Say, go and check Mary Jane or Tom Joe. They have the item and they keep it for you. And this cuts out the need for you to store the item physically and hold up space in your inventory. Now, it is best reserved, this type of inventory management technique is best reserved for rare orders or items that you cannot accommodate in your warehouse. Why? Because it means that your customer satisfaction is in the hands of your supplier rather than your own business. But again, there are cautions that need to be had in this area. Imagine that suppliers are unable to fulfill that demand. Maybe they didn't reach out to you and said, okay, you need to supply me with some more. It affects your business, it affects your brand, it affects your image. So drop shipping, have to be careful how you use this particular type of inventory management technique to fulfill the needs and satisfy your customers. It's important, but nonetheless, as we mentioned earlier, there are various techniques. For many businesses, they use a mix of these type of techniques to satisfy their needs. And the thing is, the key takeaway from all of these inventory management techniques is this. There are several ways you can manage your inventory. What you need to do is to consider your circumstances for your operations and implement inventory management technique or process that makes sense for you. You know your business. You know your business. Use which ones work for you. That's critical. Now, based on this information, I'm just going to take a little break and just ask you a question. Based on these type of methods, which one do you implement currently in your business? And if not, which one do you want to implement in your business as an inventory management technique? I give that question to you as the audience. Which one of these techniques have you used? It's not the end of all techniques, by the way. There may be others, but these are some key ones. So which ones would you want to implement in your business if you haven't done so already? Or which ones are you currently using in your business that you want to continue using and have found effective for the benefit of others who are here on the platform today?
All right.
Ramona raised said FIFO.
Ramona says FIFO, yes.
Nice, nice. Any other?
Yeah, man. Pauline, if you sell, okay, Pauline is asking if you sell multiple products, can you use more than one type of?
Yes. Yes, you can. You can. As I mentioned, there are several. You can use more than one type, but it depends. And as I said, it depends on the type of business that you have. Look on your business, which one works for you, which one makes sense for the type of products or the offering that you have as a business. I see a hand here from Leith Foster. James, all right, go ahead.
Can you hear me?
Yes, we're hearing you now.
Thanks for having me. Good morning. I came in late, so I didn't get all the others, but
Okay.
I recognize that I'm using the drop shipping and didn't know what I was using.
Okay.
Like for instance, I'm a processor and I have my seasoning and sauces. I live in the country and persons abroad and in Kingston wants my product. So there is somebody that I use in Kingston who I can, when they call me, I can say, okay, take this number or call the person, get their number, or so I get them onto the person. And that's how I get some of my products.
Excellent. And that works for you, and that's commendable.
Yes, it works for me. And also I use the post office and other ways. Persons come in and link with me and I get the product to them. I use Knutsford Express and things like that. So I use different avenues.
Very good. And as you tap into that, you know, the courier services are good as well, you know, in utilizing them to manage your inventory. For some,
that some of them are a bit expensive.
That is true. So again, you have to do research. Which ones are the most cost-effective for you? But at the end of the day, whatever it costs you, whichever one is most effective, you have to factor that into your inventory and the pricing as well of your products and how the products move for you. So thank you for that comment. Go ahead.
Just one. What I do is also I build a relationship with my customers, and because they want my product, they will either go halfway or they will pay to have it delivered.
Okay, nice. Very good. Thank you for that comment. See a comment here from Opal Reed.
Okay, I'm just asking. Good morning, everyone. I'm just asking. My service is not really it's not a product. It's really more like a service.
Okay.
like a cleaning service. So I'm just asking, well, so far I'm new here learning, so I am looking at like the FIFA, the FIFO,
Right.
if
People.
that would be a best method for me,
You have a
because it's
cleaning
more
service, you
like,
say? Enlighten me a little bit on the
yes, it's
cleaning
like
service.
well, we do residential and commercial cleaning, which we do like the offices, we do like lawn cares.
Okay.
So I am looking into things as if like when it is like for the lawn care, because that more go a little bit more faster. All right. So like for the lawn care now, I would say like for the material, like for gas and the aisle and all those things to go into the machine and so
Right.
what method would I be using there? I'm just asking.
Well, again, it can be a mix because when you think of, you said gas that goes into the machine to, you know, um, power the machine or whatever the case is, gas prices go up and change every week. So what is the cost
Yeah.
that you put to your customers? Is it that you have a standard cost? Is it that you're going to factor in, okay, you have looked on the trend, for example, in the gas prices, how it has moved over a particular period. You can hedge against, you can make an assumption. So, okay, gas prices will increase by 30% or whatever percent. And that kind of taps into the demand forecasting as well. And you say, okay, do I need to price my items or my inventory or the services that I offer at a particular price to hedge against any movement in the prices? And then you present that to the clients in terms of what you're offering. Again, it goes again to the minimum order quantity or economic order quantity as well. Why? Because again, when are you going to reorder the items? Is it that you have to buy gas every week, every 2 weeks, every month? Store it, what the case is? How do you store the gas that you have? All of these questions come into how you manage inventory. So as I said, there are the different techniques based on the type of business that you have that you can implement, but look on which one works the best for you. And if you're in business for a particular period of time, then you know the items that are heavily demanded in your cleaning service. Is it disinfectant? Do I need to buy it in bulk? Do I need to buy a particular brand? All of these questions you need to ask yourself as a business and implement techniques that can work for you so that your business is
But
successful.
what one of the things that I struggled with business wise is the expense, all right, like the material, because you have people who say like labor costs don't go up but material costs go up, but majority of the time people don't really want to pay for both, for the material, because they are saying like this is for this that month and this is for this month, so I'm not I can't able to pay for that, pay for the material cost. So it's like it is struggling for us as small business to really get the concept of what it is, and to really please to really try to what would I say now, to please the client, because sometimes it is very struggling, because at the end of the day you come out with the loss.
It's true. And again, you have to, as you mentioned that fact, even though they said the labor cost goes up, it might have to. Again, there are unexpected that can happen in a business, and you need to hedge against that. So project what can happen in the business. And for example, if the material cost goes up, then you might have projected your labor costs to go in line with that. So even when the material cost goes up, even if you take a hit on the material costs, because your labor cost is probably a little bit higher than the norm, you would have covered it and cushioned that increase in purchasing that you had to do for your business. But again, as I said, the techniques are there. It's a mix of them, but think carefully about them and which one works best for you. All right, now we move on. Now, just to highlight some of the common errors in inventory management. Now, there are three primary challenges for persons who are managing their inventory. First is, as I mentioned earlier, we have been saying it before, having too much inventory and not being able to sell it or utilize what you have. The second is not having enough inventory to fulfill the orders or the demands that are placed upon you. And the third is not understanding what items you have, where they are, and who you need to sell them to. So these are some common challenges or errors that happen in inventory management. Now, we had mentioned it before, but we'll mention it again. Choosing the right system to manage your inventory is critical. Now, the size of your business, which relates to the number of employees or the number of products, and the location of your customers, sorry, are all factors which impact how the inventory of your business is managed and tracked. Now, you can have a sole trader, for example, who has software, the right type of software, and he can buy and sell thousands of products to customers across the world, while you have a business that has many employees and a few products, and they struggle to satisfy those few customers because they don't have a proper system. Now, the question is there, and I ask you to give thought to it in the interest of time, in terms of some examples of Jamaican businesses that could improve if they had a better system to manage their inventory and serve their customers. That's something for you to think about. Think about your own business. Is it that you need to implement a software system to manage your inventory? What do you need to do and serve the customers? Think about that. And of course, you can always send your comments in as we continue. Now, there are three basic types of inventory management systems. And when you use systems, I mean processes we're talking now. Now, there's a manual inventory system. Now, this involves physically counting items or whatever you have and recording them on paper or in a spreadsheet. And many small businesses use this. You go into some shops and you see them have an exercise book and they write down everything that they have there. That's a manual inventory system. Now, you have what we call also a periodic inventory system. Now, the periodic inventory system includes a manual element and also a periodic element. Now, when we talk about the periodic element, we're talking about a periodic count, which records how many items move in and out. And for some businesses, they have implemented a called a barcode system that will simplify this process for them. And they have a database which contains records of their stock levels and their locations. So periodic, every now and then they'll go and check. For example, if they have the product at different stores, for argument's sake, they might go around and check the different stores and say, okay, I have this here, I have that there. And they make a note of it and they record it. For the person at the corner shop, they might choose to count every week to see how much bread I have. Do I need to order back from National Bakery or whoever they're ordering from? Periodic checks. Now, for other businesses, they have what we call a perpetual inventory system, where it provides real-time data on the stock movement. So just think, for example, like a supermarket. Even though we're talking about small business, just think about the supermarket. And as soon as they swipe that item or they check that item, beep, it reduces their inventory. That's a real-time inventory management system. And as I mentioned, they use a scanner or whatever the method is that they have. Some persons have scanners on even their phones, and they utilize it to track their inventory and the movement of their inventory. Now, if your business does not have a lot of products, and we're going into a little bit into the manual inventory management tool. If your business does not have a lot of products, it may not be profitable to purchase a system. That's a fact. You don't have too many. Probably it's just one item that you carry. And in that case, you just need to manage it maybe through your invoice books, your cash books, your receipt books, whatever the case is, and you write it down and you manage it. In these modern times, some persons have a smartphone and they get a little app, a little spreadsheet for argument's sake, and they just have it there and they make a note of it on their phone or whatever device that they have, and they're tracking their inventory in that way. Now, with the manual system, of course, it's manual, so it is prone to errors and it should be frequently monitored and rechecked. Now, here's a spreadsheet example, as we had mentioned, and this lists the items, the vendor, the type of product, the cost, the quantity, the reorder point, how much time it's going to take, which is the lead time, where it's located, all those little things, little notes that are made for persons in the manual inventory management system. Now, there's also the automated inventory management tool. Now, using an automated inventory management system, you'll always be able to keep up to date and accurate information in terms of what you have and where you have it. And knowing what you have and where you have it allows you to practice airtight inventory control while satisfying your customers' demand. So if you have 10 of this item at a particular price, you know exactly what you have. So when a customer comes to you, when they ask for something, you know, Opal had mentioned her cleaning business. She knows how much of this she has. She knows how much she needs to service. She keeps it tight. Now, another benefit of the automated inventory management tool is that you're able to set customized alerts. So you don't have to worry about running out of stock or being short or items expiring or items going out of warranty, whatever the case is. And this will save your company from a major headache. Why? Because it keeps your company profitable, productive, and you're completely aware of what's in stock, what's running low, and what needs to be used up quickly. So even for the man at the corner shop, this might work for him. Just might not be thinking about it and say, well, maybe it's too much, but it can be used and it can help your business to be profitable. Another benefit of an automated inventory management tool or software is that because it stores data, you'll have access to tons of useful information about your inventory and your inventory history. You can create reports from this. Some systems are able to just click and it downloads a report for you, and you're able to look on that report and read what's happening. You can gather insight. You can forecast demand, as we mentioned earlier, as one of the techniques. You can do maintenance if you need to. If you have cleaning machines, you can maintain them at a regular cycle. You can generate how much inventory you have and conduct an audit of your inventory, especially if you have other persons working with you. You conduct an audit of your inventory. You know what's happening. You know if anything is missing that needs to be accounted for. All of these factor in. Now, for some automated systems, it can be confusing. It can be complex. There are many out there. So care needs to be taken to ensure that the right one is chosen for you that fits your company. Now, this is just a list of some of the automated business management software that is available out there. It's available online, and the types are there depending on the type of business that you have. You can go on it. Some of them are free, so you don't have to pay for them. Others, you might have to pay a small cost for them. In Jamaica, it's very common for the persons to be using things like QuickBook and Peachtree in their business, but that's what works for them. But again, do research, talk to other persons as well who are in the industry, in the business that you are. Ask them, what are you using to manage your inventory? And then you see if that works for you. You can go online, as mentioned, and do research in this regard.
All right.
No,
Spencer, before you get to your conclusion, just a couple of questions here.
go ahead.
The processes that you mentioned, there was what we call it, FIFO or FIFO?
FIFO.
All right, FIFO and LIFO. What were the two that followed after that one? For the benefit of Tamika, she came in a little bit
okay,
late.
let me just go back. So we had
right, so FIFO and LIFO, and then
demand forecasting.
Right.
You had minimum order quantity versus economic order quantity as well.
All right.
You had
Tamika, you got those three. Second question, Amanda is asking, are there any apps available that can be used for inventory management?
Right. So what you're seeing here, some of these are apps.
Okay.
On this page, some of them are apps that can be used, and you can do research online and look on what works for your business. Again, it's free. Some of them are free. Some of them you have to pay a cost, maybe a subscription over a period of time, monthly, yearly, quarterly, whatever the case is. But look on your business, do research online, ask questions of other persons in the industry to see what they're using and which one works for them, and try it out, test it out. For some of them, you can go on YouTube and even watch the videos of how they work, and you can say to yourself, okay, can I manage this? Or do I need to have somebody manage it for me? Those are things that we need to do. But again, the critical thing is doing research.
All right, wonderful, wonderful. We still have one more question though.
Go ahead.
One that has been popping up every now and again in the chat. Are you open to sharing the presentation with the person in the room today?
Sharing this presentation?
Yes, this presentation. The copy of the slides. Can I share?
Sure, that's not a problem. That's not a problem. Not a problem.
Right, great.
Not a problem.
So question answered. Proceed, Mr. Spencer. Thank you.
No problem. All right. So in summary, inventory management, it's not the most glamorous aspect of the business, but it is critical for business profitability and scalability, how you grow your business. Now, good inventory management, proper inventory management eliminates waste of money and products. It eliminates stockouts and delays in order fulfillment that can create upset customers. And it also eliminates loss of valuable items, which immediately eats into your profit margin. And an effective inventory management process can prevent these issues, as mentioned before, and offer many other benefits. So whichever way you choose to manage your business and your inventory, plan thoroughly, choose your customers and your markets wisely, determine which products and inventory that you need, negotiate purchase prices. Maybe you have some suppliers that you have to go and talk to now and say, okay, work with me, I have a business, help me out, whatever the case is. Do your surveys, see what's happening in the market. What are the prices in the market? Do I need to adjust my prices or plan ahead for what can happen? Whatever it is, ensure that you are managing your inventory, ensure that you're managing your business carefully so that you can maintain profitability and maintain the success of your business. Thank you very much for your time this morning. And if you have any further questions or comments, you can share them now. And of course, as mentioned, I'll share this presentation with you for your benefit. Sansia can get this information to you as needed.
You know, there are some presentations that when they are finished, I wrote down a set of questions, and with each question that I wrote down, the response came, and it just kept coming and coming. And so for me, this session this morning has been totally and completely informative. Mr. Spencer, I want to thank you so much. And ladies and gentlemen, we owe Mr. Spencer a couple of hours because guess what? He's on vacation, right? So this is indeed a special presentation that he has facilitated for us this morning. And we are so appreciative, Spencer, for taking your time out of your vacation to come and spend. So far, it looks like just over an hour with us. Thank you so much. Ladies and gentlemen, just a reminder, I have placed the evaluation form in the chat, and I am asking you please just to leave your thoughts on this morning's presentation with us. We will, of course, share the presentation with you to the email addresses that you have registered with. So you don't have to worry. Once you are in the room, it means that you would have registered, and so we have access to your email address. Just another opportunity. Are there any questions, burning questions that anyone would like to ask at this time before we close off the session? In the meantime, valuable info. Thanks, Mr. Spencer. Thank you, Mr. Spencer. God bless you. That's from Opal. Awesome presentation from Amanda Chin. And I concur with all of the commendations. All of the commendations that have been made so far. We just want to remind you, of course, that the session will be available on YouTube. So you can check our YouTube channel at JBDC Jamaica. by about Friday of this week, and the presentation should be there. So you can go ahead and just rewatch it. I'm gonna go ahead, Leaf, and allow Leaf to ask her question. So Leaf, we're unmuting you and you can go ahead with your question.
Thank you very much. It's not even so much a question. It's thanking you, JBDC, for this presentation. This is where I'm at, and it is so important to do inventory because I have to be working with farmers and other, my business is different. It's a little bit complex, and I'm building a business where I have to have inventory with every participant, every provider of service and products. And this is what I needed right now.
All right, thank you so much, Lee. And for Winston, who has asked, when is part 2 for this presentation? Next year. 2023 is part 2. All right, because as you know, we would have been running these sessions since the start of the pandemic. So we have covered quite a bit already, but there are still some areas that we want to focus on. So as we go this morning, our next set of sessions, of course, will be in October, where we're going to be focusing on preparing for the Christmas rush. So we'll have some very important organizations that are going to be joining us for our sessions that are in October. We urge you to register when you get the prompt so that you can be part of the session. Again, thank you so much for sharing with us, taking time out of your vacation, Mr. Spencer. We truly, truly appreciate it. And thank you so much, ladies and gentlemen, for joining us. Again, you can follow us on any of our social media platforms on Facebook, Instagram, and Twitter. And of course, check out our brand new website, www.jbdc.net. Until then, have a great rest of the day. Thank you so much.